Howard Schultz is the CEO of Starbucks, and for a good long while now, he's been waging an absolute war against unionization of Starbucks, perhaps thinking that that is in the economic interests of the corporation. Well, there are people who don't think that it is, and some of them are actually major investors in Starbucks, and there is sort of a revolt going on, encouraging him to stop that, being led by what's called Trillium Asset Management. Here, we're gonna hold off on that for just a sec. Let's take a look at this video at what they're saying.
My name is Jonas Krohn, and I'm Chief Advocacy Officer here at Trillium Asset Management. We're a $5 billion asset management firm in its 40th year, and we are clearly interested in the financial success of Starbucks, as our clients and funds hold about $53 million worth of shares. So in the last 10 months, Trillium has been actively pressing Starbucks to respect worker rights to organize. From a bottom line point of view, we are very concerned about Starbucks' behavior over the last few months in response to worker organizing efforts. Conduct that the National Labor Relations Board has concluded violates federal labor laws. We are particularly concerned about Starbucks management's behavior at a time that the public support for the right to organize is at record high levels.
As of June 2nd, there are 177 unfair labor practice cases open against Starbucks.
Starbucks' financial success depends in part on the strength of its reputation, and it should not put that reputation in jeopardy with behavior that the NLRB regards as union busting.
And that makes a lot of sense. Being so opposed to unionization is theoretically bad enough for your brand. It starts to look even more ridiculous when you are clearly on the losing end of this. I mean, so many Starbucks branches have been unionizing week after week after week. At a certain point, I feel like the economic calculus inside of Starbucks should change, and they could back off. It would be obviously good for their employees, but also be good for their shareholders. I want to take a look at this chart. It's going to show the stock price over the last year for Starbucks. And things have not been going well there. Now we can't, attribute causality to what they've been doing in regards to unionization or the unionization itself, but we can and will in a bit talk about some of the studies that have been done about the effect of unionization on stock prices. And it is not the doom and gloom thing that someone like Howard Schultz might have you believe.
So there's two parts of this story that are really interesting. One is that, this is a very serious asset managed company. If they manage $5.6 billion, right? And they have, what did he say, 53 million invested in Starbucks? So they're not looking to lose money. And they're saying, look, we want to make money, but paying your workers doesn't mean you don't make money. In fact, by not paying your workers, look at your stock price. You're costing us money. So it doesn't make any sense to do what you're doing. That's an excellent point to make. So we've talked a lot about this before, which is if you got a small company, and this is Rogan uses that example of a small bar owner in your local neck of the woods and stuff, makes it seem more sympathetic, and those do exist. And so, okay, then you have issues about whether you can survive. A company like Starbucks, they don't have any issues about survival. They make billions and billions every year. They really have no reason why they couldn't pay their higher wages, right? Mm-hmm. So. And secondly, and I think this is even more important, guys, you see what's happening? You're creating economic pressure with the labor demands that you're making. And it's hurting their stock price, and now you got their attention. Because at the end of the day, it's all about the money. And so we're gonna have real power in this country when labor wakes up, whether it's through old unions, new unions, or not through unions, but just labor uprising, right? And you realize, and progressive uprising, you realize that if you damage a corporation's brand enough, their market cap goes down, and then they go, wait, we're better off paying them. Mm-hmm. We'll lose less money that way, or they make money no matter what. They make billions no matter what, right? But we'll lose less money from that than our stock price going down. There we go. That's how you can effectuate real change.
Yeah, and look, if you really think about it, it makes all the sense in the world that in a lot of cases, and the studies bear it out, unionization and whatever effect it has on wages or benefits can be in the financial interest of a company. Perhaps not in the immediate term. If we jump ahead a little bit, some studies show that there may be a drop in stock price in the first 15 months after unionization. But then the benefits of it, which lead to a happier, more productive workforce, which is gonna naturally have less less turnover, that decreases a lot of risk, and that can save a lot of money. If you get a happier workforce that is staying longer, you have more upward mobility in your workforce. You can do more promotions from inside of your own workforce rather than conducting costly headhunting expeditions outside of the company. All of this can be good for the stock price long term. And this isn't hypothetical. I mean, they're analyzing real companies. We're going to focus on one, and that is UPS. So they say that they have the highest wages in the industry for their drivers, $36 an hour on average. Annual wage increases are guaranteed by a multi-year collective bargaining agreement. All of that is costly, sure, but it leads to UPS drivers staying on the job. Their average tenure is 16 years.
Wow.
And that means that they don't have to constantly be hiring, constantly be training new employees, and that is incredibly beneficial, not just in terms of making good on the mission of the corporation, but also in terms of economics.
$36 an hour, isn't pretty good, right?
I know. They didn't call me back, I applied.
Yeah, so,
but anyway.
And by the way, there's many examples of this. Costco treats its employees really well and does spectacular in business. You don't have to be a terrible person to run a company. But unfortunately, the companies that are public, the great majority of the time, the market creates pressure. You must maximize profit. So if you can squeeze wages down to the point where your employees can barely live, that's the ideal place for wages, the market says, right? And that's barbaric. And so we've got to have structural change because that's what's driving the whole country crazy. That's not just the left wing, the right wing. They sense that big business is screwing them. We just showed you a poll earlier in the week where they said 73% of Republicans said, yeah, corporate executives make way too much money. Yeah, they know too, right?
Yeah, and by the way, I mean, you might think, well, if all this makes economic sense, then why wouldn't Howard Schultz do it? Because he's a human, he's not a computer. And a lot of these wealthy guys, look, we're not supposed to say it. We're supposed to pretend that billionaires are amazing. They're all the best people in the world. They're all smarter than us, harder working, better moral fiber. No, a lot of them are incredibly biased against workers. Like when you listen to Elon Musk talk about workers, he thinks they are lazy peasants. He thinks that they are freeloaders. I don't know Howard Schultz nearly as much, but I've seen some of the speeches he's given to his workers of the last year. This is a guy who actively seems to feel he is in some, not just a metaphoric war, but almost a literal war. Like this is a zero-sum game. They will lose, he will win. And so, I don't know, if it takes an asset management corporation to get through to them, maybe that's what it takes. But don't assume that bosses, that CEOs in particular, these major corporations are always gonna do the right thing. They are flawed human beings, some of them far more than on average.